I guess what the measures do is they fundamentally misunderstand the incentives of those that control 80% of Korea's company. And you brought up the fact that some of them prefer low stock prices for inheritance tax, but it goes beyond that. Some of them also prefer low stock prices because it provides continuing opportunities to force minorities out, which they can do at the market price. And also it results not necessarily only from an intention to keep stock prices low, but because they're allowed to get away with mistreating minority shareholders, and the low share prices is a response to that. So these measures that you mentioned are voluntary, but how do you convince someone to act against their own interests? And by implementing measures to do all these right things, the controlling shareholders would be acting against their own interests because right now they are able to benefit at the expense of minority shareholders and benefit by having low stock prices. So what possible reason would they have from acting against their own interests? And the starting point with Japan is
what do we need to see?
So what we
Sorry
need
to cut you off there, Jonathan. So what do we need to see so that this value up program is in line with these listed companies' interests? Is it the compulsory nature that we need to see in these measures?
It's very simple. All that needs to happen is Korea's laws and regulations need to be brought in line with those that apply in well-regulated markets. I mean, that should be the key question to regulators. Why complicate your lives with these voluntary programs? Do the things that apply in other companies. Number one, introduce a fiduciary duty of care to directors. It's crazy that they don't have that in Korea. End related party transactions unless you get minority shareholder approval. Introduce a mandatory offer tag-along law in the case of companies that are taken over. End compelled share swaps. Cancel excess treasury stocks. All of these things already apply in other markets. So by coming with a voluntary program, the regulators are putting the cart before the horse. The first thing you need to do is get your regulations right. And then, if that doesn't work, but that will work, then you start talking about voluntary measures.
But realistically, and let's be real here right now, do you honestly believe that that will do these things, the lawmakers and regulators? Because I'll say the quiet part out loud, they are completely beholden in a lot of instances to these financial interests.
Unfortunately, I agree with you. I think this is a long-term process. I do think that the shift is the following. Now, for the first time, there is a large number of individual shareholders. You have 14 million individual shareholders. You also have indirect participation via the national pension services. So you've got all of that, as well as the Korean cost of capital, which applies to every single entrepreneur. You've got all that on one side that want better regulations, and all you have on the other side is maybe 500 families who want to keep the status quo. So that is what you've got. Now, those families, for obvious reasons, are revered in Korea, particularly the ones that have done very, very well for their economy. But that is the equation. You've got the entire Korean population, plus all those entrepreneurs who rely on a low cost of capital on the one side, and a very, very small number of, albeit powerful families on the other side, and the interests are completely opposite to each other.
Jonathan, are many investors like you in your camp comparing Korea to Japan, and you're talking about how Japan's stock exchange measures and what they've done with the improving corporate governance standards has been effective?
Japan's been effective because no one has benefited from the status quo in Japan. You don't have a situation, firstly, where you have many companies controlled by families. There are relatively few companies controlled by families, but more importantly, in Japan, no one is benefiting from the status quo. The laws in that country are already effective in protecting minority shareholders. So the cheap Japanese stock prices haven't resulted from an intention to keep the price low or mistreating minority shareholders. They result from inattention or perhaps a conservative mindset that resulted from a survivorship bias from the bursting of the bubble in 1999. So when Japan companies are confronted with, why don't you guys do this on a voluntary basis? They think to themselves, well, makes sense. No one's losing out. In fact, everyone's gaining. So let's do it. In Korea, you've got the situation where if we do these things, we're going to be acting against our own personal interests. So that is the key difference.